let's look at the formatting of centrally controlled branch accounts. There are 7 accounts when goods are sent at selling price and 6 accounts when goods are sent at cost. So we have the branch stock account. We said it is for determining the gross profit. This. So on the debit side, we always have the opening balance. Then we have the goods sent to the branch. Then we have goods returned by customers. Yes, since a stock account is an asset account, it increases by debiting and it reduces by crediting. So the opening balance, when goods are sent to the branch, stock is increasing. Then when goods are returned by the customers to the branch, still goods are increasing. That's why we are debiting them. Then when we make a credit sale, goods are going out, meaning it is reducing. So that's why we are putting it on the credit side. Even cash sales, goods are reducing. Then when goods are returned by the branch to head office, it is also reducing on the stock available at the branch. Then in case of any normal loss of the stock or abnormal loss of the stock, they are also reducing on the stock available. Then in case of goods stolen, they also reduce on the stock. Then we have the closing balance. Then when we get this side minus this side, we get the gross profit. It can either be a gross profit or a gross loss. So when the debit side is greater than the credit side, it is what? It is a profit, gross profit. When the debit side is less than the credit side, it is a loss. So if this side was greater than this, it would have been a gross loss, and put this side. You write it here, gross loss. When this side is greater, it becomes a gross profit. Then we come here, the second account we have is for the branch debtors account. So this one deals with credit sales or creditors. It deals with credit sales or debtors of the business. So we usually have the opening balance. It is this side, since this is an asset account. Debit, it has an opening the opening balance is always on the debit side. Then we have credit sales. Then on this side we have cash received from debtors, sales returns from debtors, discount allowed to debtors, then bad debtors, and then the closing balance. These ones are put on the credit side because this account reduces by crediting and it increases by debiting. Yeah. Then the goods sent to branch account, it is used to determine the stock at the branch. We record the goods sent to the branch. Then this side we record goods returned from the branch to head office. Yeah. Then we get the difference between the two. That's how we get the stock available and the branch. Then another account we have is the expenses account. This one records all the expenses that are incurred by the branch. We only put it on the debit side: salaries, rent, petty cash, discount allowed, bad debts, wages, electricity, etc. So you add the total and you bring the total here as balance carried down. Then we have the branch cash account. It can also be the branch bank account. So this one records all the cash transactions of the branch, what was coming in and what was going out. It's like a cash book. So the cash sales, it increases by debiting, reduces by crediting. So all money that was coming in, we debit it. All money that was going out, we credit it. So cash sales, cash received from debtors, like that. That's the credit side. Then on this side we have salaries, rent, petty cash. The reason as why we are not putting some expenses like discount allowed and bad debts here, no actual cash is actually going out. It is an expense, but no cash is going out. It's the reason as why we don't put them here. Yeah. So that is the cash account or the bank account. Then we have the branch profit or loss account. This one, it is used to determine the branch profit. This side we have the gross profit, the gross profit that we determined from the branch stock account. Then on this side we have the branch expenses account that we determined from the expenses account. So you get the difference between the two sides to get the branch profit. So that is the branch profit or loss account. Then the last account that we have is the branch profit adjustment account. So this one is only prepared when goods are sent to the branch at selling price. When goods are sent to the branch at cost, we only prepare the other first 6. We don't prepare this one. So when goods are when goods are sent at selling price, it's when this account comes in. Yeah. So how do we record? How do we prepare the branch adjustment account? So we get this account, like what is on this side, on the credit side of the branch stock, we debit it. What is on the debit side, we credit it in this account. It's what we do. Yes, so unrealized profit on closing stock. This was the closing stock, the balance carried down. In case the goods stolen, you also write them here, but you only write the profit figure. So in this we write only the profit figure. The profit figure. In this account we write the cost figure. Like that. In this one we write the profit figure. So except credit sales and cash sales, we don't bring them here in this account. So but the rest, whatever is on the credit side, we debit it. Whatever is on the debit, we credit it. So this side we have opening stock, we write the profit figure of it. Goods sent to branch account, the profit figure. Then on this side we have goods returned to head office, the profit figure. Then we have closing stock, we write its profit figure. In case of any normal loss, you write it here, only the profit figure. Abnormal loss, same thing. Goods stolen, same thing. So apart from the credit sales and cash sales, we do not bring them in this account, but all the rest we bring them in this account. Whatever is on the credit, we debit it here. Whatever is on the debit, we credit it here, but we only write the profit figure. That's how we prepare the branch adjustment, profit adjustment account. So how do we determine the profit figure? So usually they will give you either the markup in the question, either the markup or the margin. They will give you one of the two when goods are sent to the branch at selling price. So in case of markup, markup is determined by profit out of cost times 100. So how do we determine the profit element? We get goods sent at selling price times the markup, then divide by 100%, 100 plus the markup percentage. An example is when goods are sent to the branch at selling price of 10 million and they've given you the markup percentage of 25%. So here you get the 10 million up, the selling price, then times the markup, which is 25, then out of 100 plus the markup percentage, which is 25, like that. And what you get is 2M. So 2M is the profit element of 10M. So meaning the cost will be the selling price minus the profit, which is 10M minus 2M. So the cost will be 8M, like that. So that's how we determine the profit element in case we are given markup. Then when we are given margin is profit out of selling price times 100. So how do we determine the profit element? We get goods at selling price times the margin. Goods at selling price times the margin out of 100. Yeah, so for the profit element, in case of margin, in case they tell you that the margin is 20% and the selling price was 10 million, what we get is 10M times 20 out of 100. So what we get is 2M. So that becomes the profit element when you are given the margin. So you should cram these two formulas, these ones. When goods are sent at selling price and I've given you the profit margin, you get the selling price times the margin percentage, 20%, then you get a profit element. When it is at markup, when I've given you markup, you get the selling price times the markup out of 100 plus the markup, which is 10M times 25 out of 100 plus 25. Yeah, that's how you get the markup. So you should put in mind these two formulas. So in this case, whereby we have the selling price is 10M and the profit is 2M, so the cost is 8M. So in this account, we record only the profit element, which is the 2M. Then in the branch stock account, we record the cost element, which is the 8M, like that. So when goods are prepared, when goods are sent at selling price, that's when this account comes in, and it's when all of this comes in. Yeah, hope this has been of help. Thanks for watching. Do not forget to subscribe, like, comment, share with your friends. Let's catch up in my next video.